Welcome to the short executive knowledge lecture on topic 3, paper 8 of the SFC licensing exams. This topic covers participants in the market. So it's the major players, the participants in the securities markets in Hong Kong. I will emphasize important points to help you understand the core material you need to know to sit the paper 8 exam, and a copy of the study notes you see on the screen can be downloaded from the Executive Knowledge website under paper 8 resources. As ever, I strongly recommend you to go to Examinator.online, where you can access practice questions. Remember, the way to get this material into your short-term memory is to do as many questions as possible, and those can be found on Examinator.online, which is referred to at the bottom of the pages that you see. So what is involved in topic 3? The participants are brokers, and there's quite a bit of material on brokers, and I'll go into that in a moment. Traders, research analysts, institutional investors, retail investors, and high net worth individuals, and there is a distinction. Arbitrageurs, and that often finds a question popping up. Financial advisors and private wealth managers, credit rating agencies, custodians, share registrars, and then we'll look at the Hong Kong Exchanges and Clearing Limited, that is the holding company for the markets, the stock exchange, the futures exchange, and we'll finish off by considering the roles of two regulatory bodies that affect the securities and futures industry: Hong Kong Monetary Authority with regard to authorised financial institutions, and the Securities and Futures Commission itself, which is the organisation that insists that you sit these exams. Okay, let's start with brokers. Who are brokers? Definition is a firm that acts as an intermediary, a go-between, if you will, between a buyer and a seller of securities, so links the two up. And the brokers charge a commission for their services. Now, it's not just buying and selling, they can provide advice. Now, if the advice is incidental, they don't need a separate license for advising, but often they will have that separate license. So what's the role and duties of brokers? Well, as I've just referred to, they must be licensed by the SFC. It's a type 1 regulated activity dealing in securities. Now, if you trade securities directly on the stock exchange, you must be an exchange participant. Also, client may hold a discretionary or non-discretionary account with a broker. Now, with the discretionary broker, the broker is given the power to decide what is bought and what is sold. The client is giving the broker that power. Whereas a non-discretionary account, no, broker can only act when he or she receives instructions from the client. Now, licensing, this is done by the SFC. You're licensed for dealing, type 1, trading in futures, type 2, giving investment advice on securities, type 4, futures, type 5, providing margin financing for the trading of securities, where you're lending money to allow an investor to buy stocks, and often listed stocks, and often those stocks are provided as security collateral. Providing credit rating services, S&P, Moody's, etc., Fitch. Trading and leverage foreign exchange contracts, that is a type 3 license. Now, the AFIs, authorized financial institutions, principally banks, which are supervised and regulated by the Hong Kong Monetary Authority, they're not licensed. They must register with the SFC if they wish to conduct any of the above regulated activities. And to obtain a license, among other things, you must show that you are fit and proper with regard to your financial standing, your reputation, and your competence. Now, the responsibilities that brokers have with regard to SFC regulations is to protect the interests of the investor, and this comes in the Code of Conduct. And in that code, they insist that you must have a client agreement before providing any services. KYC, you must know your client, know the identity, know their investment experience, investment objectives, etc. And there is information that you should be providing to clients. Continuing, top page 4 If you are going to pledge client securities to another institution, must get written authority from the client. Segregation of client assets, both cash and securities. These assets must be segregated from the broker's own assets, and that's covered in the client securities and the client money rules. Subsidiary legislation. Should have adequate internal control procedures covered by the internal control guidelines. Regulatory supervision, where you must comply with all the regulations out there. Compensation arrangements, this is an old one, contribution to the investor compensation fund. Technically that has been suspended now, but it is still in the material. Okay, a last point under brokers there. Broker recommendations should be matched to the client's particular needs, objectives, and circumstances. Your advice must be suitable. Traders. Now, many people think, well, brokers, traders, same thing. No, traders act for themselves or for their principal, their employer. They may hold an inventory and they will often try to sell at a profit. In other words, they're not representing clients, they're representing themselves or their employer, the principal. Now, two types of traders: flow traders, where they are assisting with large orders for institutional clients, that is buying and then building up the inventory for the intermediary, and proprietary traders, out and out, just making money from market movements for the proprietor, the institution, the employer. We're told there that the same person can act as both flow trader and prop trader, the shortened version. Traders, as with brokers, must be licensed. However, if you're a pure prop trader, what does that mean? All you do is buy and sell for your employer, for the proprietary trading desk. You are exempt because you're not actually representing any clients, you're representing the principal. So if you're a pure prop trader, you do not require licensing. Research analysts, two types: fundamental analysts, who are analyzing companies, specific companies, with regard to their performance, looking at their specific circumstances, their accounts, ratio analysis, etc. Whereas technical analysts, chartists, will look at price movements, price volumes, and try and predict the future volume and movements, and whether or not it should be a buy or sell in those market conditions. Continuing, institutional investors. Institutional investors invest on behalf of other parties, and typical types: investment bank, brokerage house, pension funds, hedge funds, insurance companies, or a charitable foundation. Now, there's two types of institutional investor: passive, usually holding a small stake in a listed company, but taking little involvement, taking little action with regard to company management, etc. Whereas an active institutional investor may invest a substantial stake in the listed company and may become involved in management. Two types referred to in the notes: a strategic investor that wants to invest in the long term, whereas a corporate raider may take a less positive view of current management, looking to replace it. Well, that's one angle that they can take. Now, Section 5, retail investors versus high net worth individuals. Retail investors, usually individuals, buying, selling small amounts of stock, securities. We're told that with more education, doing the exams possibly, increasing financial advisory services, the retail sector in Hong Kong has been growing. What about high net worth investors? Again, usually individuals with substantial amounts of money to invest, and they're very sought after by brokers, advisors, private bankers. Now, Section 6 covers arbitrageurs. And this is something that pops up in the exam every now and then. And here you're looking to make risk-free profit. That's important. Risk-free. You're not taking any risk by the positions you take by exploiting price differences of securities. And arbitrage activity can account for a substantial amount of market turnover. Now, at third point, there are examples of products used in arbitrage, depository receipts, and the underlying stocks. So the depository receipts are listed by the underlying depository, and the stocks may be traded elsewhere. Index futures contract and the index constituent stocks. And we're told that most arbitrage in Hong Kong involves listed stocks on the stock exchange and futures traded on the futures exchange. Section 7 considers financial advisors and private wealth managers. These institutions help their clients develop their plans, advises them how to reach their goals, and the Hong Kong financial advising industry has grown in the recent past. Again, advisors providing advice for remuneration, you need an SFC license, 4 for securities, 5 for futures. Now, financial advisors target more general audience, while private wealth managers, and we're making a distinction between the two, tend to cater for the needs of high net worth individuals and families, family offices. Okay, let's look at credit rating agencies. Fitch, Standard & Poor, Moody's. These now have to hold a Type 10 license. That is for providing credit rating services. They never used to need to be licensed, but since the debacle of 2007-2008, the SFC introduced, as other regulators around the world did, introduced credit rating as a regulated activity, and as such, such entities need to hold a Type 10 license. Now, custodians, a favorite for examination. So let's consider these points. Custodian, an agent, holds and safeguards assets of an individual, financial institution, or a corporation. Hong Kong custody market, we're told, has grown significantly, and the entities, they're usually banks holding assets on behalf of investors, behalf of funds. They include, well, we're actually naming names: Bank of New York, Mellon, State Street, Citibank, Deutsche Bank. Share registrars, again, we've seen questions on what share registrars do. Share registrars sit between a listed company and the investors, administering all the paperwork, the dividends, bonus shares, etc., etc. Share registrars play an important role in an initial public offering because they will liaise between the listed company and the investors with regard to share issues. And we list other services that are provided for shareholders by share registrars. Please be aware of these for the exam. Section 11 looks at the markets. Hong Kong Exchange and Clearing Limited, there it is. The exchange controller at the top is a listed company, Hong Kong Exchange and Clearing Limited. It owns 100% the stock exchange, the futures exchange, the securities clearinghouse, the options clearinghouse, and the futures clearinghouse. Now, the SFC doesn't administer the markets, but it does supervise and monitor activities of all those Hong Kong Exchange and Clearing companies. And as I said, they're all 100% owned subsidiaries of Hong Kong Exchange. Now, what I've just said is in narrative form in the sections 11.2 to 11.6. Please note, 11.7, OTC, over-the-counter clearing Hong Kong Limited, that was set up as a clearinghouse for over-the-counter derivative transactions. 11.8 recognises that in the end of 2012, the Hong Kong Exchange and Clearing Limited bought the London Metal Exchange, which combines physical and financial commodity trading. Last section under topic 3 looks at the two main regulatory bodies with regard to securities in Hong Kong. The Hong Kong Monetary Authority looks after, supervises authorized financial institutions, and those authorized financial institutions have to register with the SFC if they carry out regulated activity. But the 4 points we're looking at under 12.1 are the activities that the HKMA carry out with the securities and futures industry. So maintaining currency stability, promoting stability and integrity of the financial system, banking system, helping maintain Hong Kong states as an international financial center, and managing the exchange fund. That is where all the US dollars are held, backing the Hong Kong dollar. It's technically a currency board system, although we loosely refer to it as the Hong Kong peg. 12.2 very briefly looks at the Securities and Futures Commission, an independent statutory body responsible for administering the securities and futures laws. And its objectives, main objectives, we list 6 of them at the bottom of page 8. Now, topic 3 doesn't tend to get a majority of the questions at paper 8, but there will be a number of questions set. And as I went through the material, I did try and highlight the areas that they will examine. Those areas plus more are all covered in the practice questions that we have uploaded onto Examinator.online.